Now we are going to learn how to raise funds for startups in India. Firstly, what is startup? A startup is a company, a limited liability partnership or a firm which is established below 10 years and has the annual turnover below 100 crores in a financial year. Its goal is to work towards developing and improving the process, product or service of an enterprise. Startups need funding to grow and expand their businesses. Now, the question is why funding is important for startups. Startup funding means the funds which startups obtain to establish their businesses. These funds are one of the essential pillars of growth for startup businesses. Newly established startups need funds to cover their marketing and operational expenses to launch their businesses. Established startups need funds to increase their capital for initiating the development of ideas and formulating plans to increase the growth and expansion of their businesses. Hence, the startup funds are vital to run startup at every step. How do startups get funding and the importance of timing? Startups get funding in different ways, including business loans, friends, family, personal savings, venture capitalists, and startup grants, etc. So there are multiple ways of funding available for startups. However, the source of funding should typically match the stage of operations of a startup. Now we are moving towards types of funding for startups. First, it is equity funding. Equity funding involves selling a percentage of company's equity to the investors in return for a capital. Startups gives up a portion of ownership share to the investors, and equity investors generally make themselves involved in a decision-making process. Individual private investors, angel investors, self-financing or family and friends, venture capitalists, crowdfunding, and incubators. Next is debt funding for startups. Debt funding means borrowing money and paying it back with the interest. The borrowed money must be paid back within the sanctioned time along with the interest. The startup may need to provide their business asset as a collateral. The debt fund does not have any control over the business operations, hence there is no question of involving in decision making. The debt funds will be provided by banks, non-banking financial institutions, government loan schemes. Grants for startup. Grant is an award which is financially given by an entity to a startup to facilitate its goals and incentivize performance. Grants will be distributed in different installments as per the fulfillment of their milestones. Thus, the startup must constantly work towards achieving various milestones to get a grant. So, the grants will be sanctioned by central government grant, state government grant, corporate challenges grant, programs of private entities. How to get funding for startups in India from government? Government of India has introduced many schemes to encourage startups. There are many government schemes through which a startup can get funds. Examples of government schemes and funding options are given below. SIDBI Funds of Funds Scheme, Startup India Seed Fund Scheme, Pradhan Mantri Mudra Yojana, Stand Up India, Aspire Scheme, etc. To know more about startup funding and assistance in getting funding, reach our experts at Kanakkupillai.com.